हेलो फ्रेंड्स, क्विकली करेंसी एनालिसिस पे आप सभी का स्वागत है। दिस एनालिसिस इज ब्रॉट टू यू ऑन बिहाफ ऑफ टिकर टीवी. Before going to the analysis part, I would like to mention that we will be discussing mainly the USD INR part, how it behaved in current week and what is expected from here. Discussing USD-INR pair alone may not give a better picture without discussing the other important aspects like the dollar index, GBP dollar, Euro dollar, dollar yen, dollar candy, dollar CNY, Aussie dollar, and crude oil. Therefore, we will go through the above mentioned instruments along with USD-INR. Our focus will be mainly the technical analysis part, although we will try to consider partly the fundamental aspects like NFP data, CPA data, central bank actions of different countries, and so on. Uh, so this week that ended on 12th of August 2022, from 8th August to 12th August, we need to see how the different aspects, different important events are there, and also how the different currency pairs behave. The most important aspect was the US CPI data. On 10th of August, US CPI data print came at 8.5% versus the expectations of 8.7% versus the actual of 9.1% in June month. That actually created a lot of perception change in the market. And prior to that, what we saw is that on 5th of August, that is the NFP data, the previous week, has set the tone for the current week market, where we saw the NFP was a fantastic data. Now we'll see how the dollar index behaved last week. Dollar index last week traded in between 106.80 and 104.63. Basically, dollar index is not traded, so it moved in between 106.80 and 104.63. But what if we see the candle part, we see the some sort of rejections at the lower end. Means almost 50% of the down move was recovered during the later part, and buyers or the up move means the sellers are not that much active in the momentum. That means the market participants neutralize the 50% of the index losses what has happened post last week's NFP data. And if we see the daily part, we can see that this 105, 105.30 zone, although it broke on 10th and 11th of August, but on Friday, that is on 12th of August, we saw some sort of rebound from the low, and that shows that some sort of hesitation that the index is going on the lower part. What it says that we need to see here the two important things. First of all, the sentiment. Earlier last week, our analysis was that it should not break above the sentiment, and also this particularly important zone, that is the 107, 107.50 zone. And now this week also our concern will be on daily purpose. It should not break above the center band. That is center band of the Bollinger Band. This part, this is the middle line. It should not close above that one. And also we can see the this zone, that resistance zone has moved down a little. Now it should be around 106.80 to 107.20 zone. And in any case, it should not move above or close above this 106.80 to 107.1020 zone. What it means, because here we see that from 14th of July onwards, we see some sort of lower high, lower low formations on daily chart. If it closes above this part, then this lower high, lower low formation will get negated and market will enter into a choppiness. On the dollar rupee part, what we see on weekly chart is that first of all, previous week we saw a doji pattern, or you can say the spinning top, where price got rejected on both the ends, both and the lower ends, that is the 78.50 area, and also higher ends, that is the 79.85. And this week we saw some sort of demand in the market. Demand in the market says that if we see the daily activities where we can find that some good buying interest are seen in the market. And if once we talk to the market participants, we came to know that there's some oil related outflows are there, or the defense related, to be specific, the defense related outflows are there in the market, and the amount of inflows that has started pouring in is not equal to the amount of defense outflow that happened during this current week. That is why we saw market traded in between 79.05 on the lower side and 79.75 on the higher side. And if we see the daily part here, the prices are struggling in and around the center band. First is this center band of the Bollinger Band, and also this important resistance zone at 79.6570 area. On daily basis, it should not close above 79.70, 79.80. If it closes above that one, then there may be some we can say means choppiness, and maybe a upside swing towards 80.20, 80.40 type. There may be on or some small demand in during that market that may be seen. But if we see the RSI part, if we see it daily, RSI is at your 56 area, that means which is within the 40-60 zone. That means that till RSI is below 60, the upward momentum may not be that much great. If we see then here one more thing, that once it breaks below 10th August low, that is 79.05, then we may see again a test towards 78.50, 78.60 area. So that is in coming weeks, and some sort of and one more thing is that if we see the Bollinger Band on the upper band and the lower band are means some sort of horizontal means patterns is there, angular angles are missing. What it shows that the market will be range bound between 78.50 and 80.20 type, in between, on a broader sense, not on a daily basis. In between this range, it will behave before taking a particular direction. So broader sense, 78.50 on the lower side and 80.2030 on the higher side. And but if it is able to take this resistance, that is the 79.7080 as the resistance, and breaks below the low of 10th of August, that is the 79.05 area, then we may see a lower part towards 78.50. And GBP dollar, if we see that actually some sort of concerns for the inflation related things, because of which BOE will probably have to raise interest rates further from their current 14-year high to tackle inflation pressures. It is said by BOE Deputy Governor Ramsden has spoken about that one, because of which some sort of market is cautious about buying, and rather we are seeing some sort of sellers active in this market. And if we see the weekly chart first, we see that that 1.225 is 1.226080 is offering a good resistance area, and it traded in between 1.2276 on the higher side and 1.2047 on the lower side. That being the case, some hesitation in between 1.23 on the higher side and 1.1950 on the lower side may be there in coming weeks. And on daily part, we are getting one support trend line, and if price on Monday it closes below this, means able to close below this trend line support, then we may see some sort of lower side movement, downward movement in this currency pair. If we see the GBP INR part, weekly part, we see similar type of price consolidation in between 97.30 on the higher side and 95.50, 95.70 on the lower side. And the way that three back-to-back weekly candles are there, we expect some consolidation within this range only. That is, what is that range? 97.30 on the higher side and 95 50 on the lower side, some sort of consolidation within this range before it is breaking on the either side. We need to wait for which particular direction the means the market or the price breaks. And on the daily part, what we see is that earlier last week our concern was that means it should not break below the center band on a daily basis, and it respected that part. Again, yesterday we saw some sort of sell-off, and we need to see that it is not breaking convincingly below the center band if it has to move higher. If it is closing below the low on below the center band and follow through is seen, then we may expect some sort of sideways choppy and behavior in this instrument. Euro dollar, if we see on weekly part we see a good bullish candle, but price rejection on the higher side, and it traded in between 1.0160 on the lower side and 1.0368 on the higher side. And we see a lot of price rejection from 1.0380 to 1.0256, means already more than 100 pips selling means price rejection on the higher side. That being the case, what it shows that in upper level sellers are very much active there. On daily part, we see already it is making lower high, lower low, and that being the case, now the swing low is coming back to this area, that is 1.013050 area. In any daily close should not close below this swing low, otherwise it will distort the higher high, higher low formations, which may take the euro dollar currency pair higher. So any dip may be bought subject to this swing low as a stop loss. On euro INR weekly part, if we see here also a good strong means bullish candle formations, and it traded in between 80.67 and 82.38, but price rejection on the higher side, and we see that some rejections towards 80 from 87.30 to 81.80 levels. So this becomes a resistance zone here, means if it has to move higher, it has to means this rejection area, that means the sellers area has to be overcome, means buyers has to means get strength to break above this zone. And if we see the daily part also, now this is the you see this is the center band of the Bollinger Band, and in coming days, Monday, Tuesday, Wednesday, and so on, it should not close below the center band. Otherwise, again, the choppiness will prevail in the market. Dollar yen, what we see on weekly time frame is that price rejection was there during the week, but at the lower level, buyers were active to defend the selling interest. That is why we see previous week where the low made was 130.39, and the current week the low made was 131.73. So what it signifies, the buyers are getting active on the lower end. So this becomes, that is 130.50 to 131.50 becomes a strong support area. On daily part, we see that means it took resistance on the center band. Here, if we see my daily currency analysis in my YouTube channel, Barua's Way, you will see that you will get a daily update here there. And here we were anticipating that it should not break above the center band, and it has respected that one. Now, that being the case, if you see the overall price, how the price is behaving, it is breaking lower high, lower low. Now, one is due, one down move is due, which should means break below the swing low, thereby completing the lower high, lower low formations. And any case, it should not break above your swing high, that is up 135.5080 zone. It should not close above that one, otherwise it will distort the lower high, lower low formations. Yen INR on weekly time frame, here also we saw good bullish encounters here, but price got rejections at the higher levels, and it traded in between 0.5862 on the lower side and 0.6034 on the higher side. But price rejection on the higher side says that here the sellers are very much active. And on a daily basis, the good thing is that it is making higher high, higher low. Now one higher high is due before any dip. Now the swing low is here. This particular level is the swing low, and the market should not means the price, the daily candle should not close below this swing low. Rather, means if it is breaking the high, swing high and closes higher, then it will means continue the higher low formations. In that is a means the strong strength wise trended move in such a case. Dollar can be, if we see the weekly part, a good sell-off is there and convincingly closed below this 1.28 zone. And that being the case, in coming days, we may expect some sort of sell-off towards towards 1.25, 1.2550. But it's a big move that is around 200 to 250 pips downward move. We need to wait for a means sell uptick type of formations. Here also, if we see the lower high, lower low formations, that being the case, price should not distort this swing high. And on a daily basis, it should not close above this high. Else, the momentum will get distorted. If we see the Aussie dollar part, Aussie dollar weekly, it's the strongest candle that it has made, strongest means among all the currency pairs that we have seen till now. See, the price rejection on the higher side is very negligible, minimal. That shows that the strength in currency pair. So any dip may be bought if we are getting an opportunity towards 0.70, 0.7050, one may buy for an upward movement towards 0.7250, 7300 area. On the daily part also, we see that continuously it is making higher low. That's a good trended sign. And in any case, the swing low is your 0.687080 type area. This area, at any case, it should not means the daily candle should not break below this one. Otherwise, the higher low formations will get negated. On CNH part, we see some sell-off post good NFP data last week, previous week, but the sense is that but will be clear when we come to the daily part. Daily part, we see our main concern is the 14th July mother candle. So here we see that on 10th of August, it broke below this mother candle range, but the follow through was not there. Rather, on 11th August, it again moved within the range mother candle. Now it will move down only when the 11th August low is broken and continuation follow through is seen in CNH. Brent crude weekly part means good buying seen from the bottom area, but if we can see the candle on the higher end, some price rejections. That means sellers are very active on the higher level. And last week it traded in between 100.34 on the higher side and 93.07 on the lower side. That being the case, what we expect is that any up move should not distort a sentiment on a weekly basis, on weekly chart, and also it should not break the swing high. On daily part, if we see continuously it is making lower high, lower low formations, and yesterday it faced some sort of resistance towards the center band of the Bollinger Band. It's a good sign. And if we if in current means next week it is able to close below 92.50-70, then the the target towards 90 as a short-term target may open here. And in any case, it should not break above 107, 107.50. Otherwise, this swing high, that is the lower high, lower low formation, will get distorted. US 10-year Treasury, if we see the weekly chart, the previous week, we saw some sort of good buying on the higher end, and current week also a doji formation we have seen. Doji formation, what it says that the lower level price got rejections mainly. Now the weekly time frame, we should not it should not break close above the center band in the coming week. If we see the daily part, what we are seeing continuously lower high, lower low formations, that is a good signal. And in any case, it should not disturb this level, that is 3.06 level. Otherwise, this lower high, lower low formation will get rejected. And on daily, if we see, if we draw a trend line support here, once it breaks below this trend line support, we can expect some again downward pressure here. So we need to wait for some price movement in next week. The conditions is already discussed here. So currency weekly analysis as of now is up to this much. Hope you like the video. If you like the video, then you may make your comment below, and also you can share among your friend circle. And also those guys who have not subscribed, you can subscribe the channel, that is your Ticker TV channel. So this much from my side. Wish you a happy weekend, especially the 15th August, the 75th year of independence. Amrit Mahotsav is there, and also long weekend. All take proper rest and recuperations so that the next week from 16th onwards means we can come out with a good means energy level, with good mindset, so that we can tackle the market with full energy. Thank you and bye bye.